In this video, I'm going to have a quick look at Shoprite, otherwise known as Checkers. And I'm going to share a couple important details that you need to be aware of before you consider investing in this company. Just to let you guys know, I recently started using an investing platform called BROKSTOCK, where I started my own new portfolio, and I'm going to share what I buy and take you guys along. And if you are an investor that's just starting out and you need a platform to buy shares on, consider signing up with my link down in the description. It has very low fees and it has no monthly fees. So it's the perfect platform to get started, especially if you are a beginner. Let's jump straight into looking at Shoprite. And I wanted to show you guys what Shoprite actually does and why this is such an interesting company. If we have a look at the type of businesses that Shoprite runs, it has customer rewards, it has value-added services, data and analytics, retail media, supplier partnerships and developments, digital commerce and delivery, as well as other adjacencies. And there's so many businesses associated with the overall company. So I suggest that you take the time and run through these documents and read through it if you have the time, because there's a lot of insightful information. And this is the best way that you can get a good idea of what the company does and how it operates, what are the risks involved in the company itself, and so forth. So we always have a look at the income statement, the balance sheet, and the cash flow statement. These three statements form part of a company's financial statements, and this is where you get all the relevant information to see how a company is actually performing. What I like to do is to go to the company's income statement first and click on its annual results. And here we can see the results from 2023 as well as 2022. So it's obviously a good idea to compare its statements from previous years as well as the latest year. Shoprite has increased their revenue from 18 billion rand to 21 billion rand in 2023. We can also see that the gross profit has increased from 45 billion rand to 51 billion rand. We can see that the gross profit has gone up, the revenue has gone up, but the net income itself has basically stayed flat from the previous year. I just wanted to quickly show you Pick n Pay's financial statements, and it's difficult to compare Shoprite with Pick n Pay, although they are basically the same type of business. If we have a look at Pick n Pay's summary, we can see that the market cap is 14.54 billion rand, where with Shoprite, if we do the same, we can see that its market cap is almost 10x that of Pick n Pay, with a market cap of 136 billion rand. Something that I just like to look at is its total assets. Here we can see that from 2021 up until 2023, Shoprite has grown its assets from 77 billion rand to 102 billion rand. Then what I'd like to do is to expand the total assets, click on current assets, and see how much cash and cash equivalents the company has available. So in the latest year compared to the previous year of 2022, Shoprite grew its cash and cash equivalents from 11 billion rand to 13.2 billion rand. If a company has too much debt on its balance sheet and it's not able to repay its debt, that can cause quite a lot of issues, and most of the time it is reflected in the share price. Currently, Shoprite has a current liabilities of 37.4 billion rand and a total liabilities of 76 billion rand. Of course, it has more assets than liabilities, which is great. And let's just quickly jump to Pick n Pay's balance sheet and have a look at their situation. We can see that their assets has also grown from the previous year from 40 billion rand to 42 billion rand. We'll scroll down, click on current assets, and have a look at cash and cash equivalents, and it's down from 6 billion rand to 1.9 billion rand. This is a troublesome thing to see, so it's definitely important to be aware of this. And comparing the balance sheet of Shoprite to the one of Pick n Pay, Pick n Pay is definitely not looking too good. If we click on the total liabilities, we can see that Pick n Pay's liabilities is up from 36 billion to 38 billion, And if we expand this and look at the current liabilities, we can see that its current liabilities is up from 22 billion to 23 billion rand. Then we're going to go to its cash flow statement and have a look at the real important details. Something that I like to look at is operating cash flow, which means it's the actual cash flow the company generates from its core operations. Here we can see that the company grew its cash flow from operations from 6 billion or 6.6 billion to 9.83 billion in 2023. If we go to Pick n Pay, we click on cash flow. Here we can see that the operating cash flow from Pick n Pay is actually down from 3.1 billion to 2.7 billion. It's also important to figure out trends with a company like this. So just to show you, we can have a look at 2021 as well. So we can see that Shoprite's operating cash flow has declined from 2021 from 3.9 billion, then 3.1 billion, and now 2.7 billion. Then something that I like to focus on is figuring out what is the operating cash flow margin of a company. So this is where we divide our operating cash flow with the total revenue of the company. This gives us a 4.6% operating cash flow margin with Shoprite, and let's do the same with Pick n Pay. And this gives us a 2.55% operating cash flow margin. So again, comparing this to Shoprite, Shoprite is performing much better. I have to admit, this is not the best margins out there, but it's definitely better than Pick n Pay's. Next, I want to look at its free cash flow, and if we scroll down to free cash flow, we can see that Shoprite has grown its free cash flow from the previous year 2022 from 1.3 billion to 3.1 billion, and it gives us a 1.45% free cash flow margin with Shoprite. And if we go to Pick n Pay, it actually has negative free cash flow of 916 million rand. Although this is definitely not all the analysis we have to do, but it's a quick and easy way to compare companies with each other. So just to give you guys a quick breakdown of these two companies, Shoprite, in my opinion, is the better option. If we have a look at revenue growth, Shoprite has shown consistent revenue growth while Pick n Pay has experienced a decline in 2023. Profitability is where Shoprite shines, and Shoprite reported a profit while Pick n Pay incurred a net loss in 2023. If we have a look at market share, Shoprite has been gaining market share while Pick n Pay has struggled to keep pace. Other factors that we can also consider is its efficiency. Shoprite boasts a more efficient supply chain and operational structures, and if we have a look at debt, Pick n Pay has a higher debt burden compared to Shoprite, although Pick n Pay is a much smaller company. Something else we need to consider, of course, is the valuation. Shoprite's stock price might be considered a bit expensive compared to Pick n Pay, although some analysts believe it might be undervalued. Then if we have a look at Pick n Pay's share price, Pick n Pay is undergoing restructuring and might show some improvement in the future, which could reflect in the stock price. Overall, based on the current trends, Shoprite is the clear winner. So feel free to let me know which one do you prefer. If you had to choose between the two, would it be Shoprite or Pick n Pay?